Ever wondered if you're truly getting the most out of your investments? You've heard the buzz about Robinhood, perhaps even used it. But what about Uphold? In the dynamic world of digital assets and investing, choosing the right platform can feel like navigating a maze. Each promises something different, from commission-free trades to a vast array of assets. But when it comes to Uphold versus Robinhood, which one genuinely stands out for your financial goals? We're diving deep into the features, fees, and overall experience of both Uphold and Robinhood to help you make an informed decision. Uphold markets itself as a multi-asset digital money platform, and it certainly lives up to that name. One of its most compelling aspects is its ability to allow users to trade across over 250 cryptocurrencies, precious metals like gold and silver, and 27 fiat currencies, all within a single interface. Imagine effortlessly swapping Bitcoin for gold, or USD for Ethereum. Uphold makes these cross-asset trades remarkably simple. This anything-to-anything trading feature is a significant differentiator, eliminating the need for multiple steps or conversions often found on other platforms. Beyond its broad asset support, Uphold also offers staking services for a range of cryptocurrencies, allowing you to earn passive income on your holdings. They are known for providing competitive APY rates, and unlike some platforms, they state that the advertised APY is what you actually receive after their 15% fee is deducted. Security and transparency are also key pillars for Uphold. They pride themselves on publishing their proof of reserves every 30 seconds, offering real-time visibility into their solvency, a level of transparency not often seen in the industry. They also boast certifications like SOC 2 Type 2 and ISO 27001, indicating robust security standards. For those looking for an extra layer of protection, Uphold's Vault feature provides multi-signature security and assisted self-custody. However, Uphold isn't without its quirks. While it offers fractional shares for U.S. companies, its focus is heavily on crypto and commodities, with a more limited selection of traditional stocks and ETFs compared to a dedicated stockbroker. Furthermore, their spread fees on crypto trades can be higher, ranging from 0.8% to 1.2% for major cryptos like Bitcoin and Ethereum in the US and Europe, and potentially higher for less liquid altcoins or during volatile periods. Deposit fees for debit/credit cards and Apple/Google Pay are also something to consider, coming in at 3.99%. Robinhood exploded onto the scene with its commission-free trading model, democratizing access to the stock market for millions. Its sleek, user-friendly mobile app quickly became a favorite among new investors. Robinhood's strength lies in its simplicity and low cost for trading stocks, ETFs, and options. If your primary interest is in these traditional assets, Robinhood remains a strong contender. When it comes to cryptocurrency, Robinhood has expanded its offerings, providing commission-free trading on a growing, though still more limited, selection of cryptocurrencies compared to Uphold. They offer popular coins like Bitcoin, Ethereum, Dogecoin, and Solana. A major plus for crypto users on Robinhood is the absence of withdrawal fees for cryptocurrencies, beyond the standard network fees. Robinhood also offers features like 24-hour market trading for a selection of stocks and ETFs, providing flexibility for active traders. Robinhood has also introduced Robinhood Gold, a premium subscription service that offers benefits like a 1% unlimited deposit boost, a new gold credit card with 3% cash back, and professional research data. They've also ventured into retirement accounts, IRAs, including Roth and rollover IRAs, and are even developing their own Layer 2 blockchain, showing their ambition in the crypto space. However, Robinhood's fee structure can be a bit opaque for crypto, relying on a spread rather than a clearly stated percentage fee. While they state no commission, the price you see when you buy or sell crypto already includes a spread. Additionally, some users have expressed concerns about Robinhood's customer service, often citing a lack of live phone support compared to some competitors, though they do offer 24/7 email and phone support. Their selection of cryptocurrencies, while growing, is still less extensive than platforms like Uphold. So, is Uphold better than Robinhood? The answer, as with most investment platforms, depends entirely on your individual needs and investment style. If you're an experienced crypto investor looking for a wide array of cryptocurrencies and cross-asset trading capabilities, along with the ability to stake your assets and a high degree of transparency, then Uphold likely edges out Robinhood. Its multi-asset approach offers unparalleled flexibility for diversifying beyond just traditional stocks. On the other hand, if you're a beginner investor primarily interested in commission-free trading of stocks, ETFs, and popular cryptocurrencies with a simple, intuitive interface, Robinhood is an excellent choice. Its emphasis on user experience and zero-commission trades for traditional assets makes it highly appealing for those just starting their investment journey. Consider what you value most: a broad and diverse range of digital assets and advanced crypto features, Uphold, or a straightforward, commission-free platform for traditional investments and a curated selection of crypto, Robinhood. Both platforms prioritize ease of use, but their core strengths cater to different types of investors. With that said, thanks for watching, and until next time.